let's get back to the markets. Eddie Ghabour with us this Wednesday morning. Okay, a big picture question, Eddie. This is something that I've done all my investing life. I buy and I hold. I'm not in and out. What's wrong with buy and hold today in this environment?
In our opinion, buy and hold, the post-COVID has changed the way this market trades. It changes how fast we get information. Volatility has been parabolic both up and down. And there's nothing wrong with buy and hold for a portion of your portfolio. But we just believe that the old buy and hold strategy of owning a basket of everything just isn't going to work in this new environment. The markets are too concentrated. And the best example I can give you are the calls that we've been getting so far this year are investors that are frustrated because they're seeing headlines that the S&P 500's at all-time highs, yet their portfolio's nowhere near where they were at their highs. And the reason why is they own a lot of things in their buy and hold strategy that continue to be bearish and underperform. Our strategy is to be more active and concentrate higher concentration levels in the more bullish areas and either don't own bearish trends or at least be very underweight. So that way you can get a return that more is in line with your risk tolerance, but also in line with the markets, because this has been a very highly concentrated market. And I think it's going to continue to be that way. So you have to be nimble. And lastly, our job for investors, mainly as we work with retirees and pre-retirees, is protect against major drawdowns. The next time a major drawdown comes, if you just have a buy and hold strategy where it's don't worry about it, it will come back, I just don't think that puts their interest at best in that scenario, because when a retiree loses a lot of capital, that can really change the trajectory of their retirement.
Oh, you got that right, Eddie, for sure. Now, do you see a big decline in the market or the economy this year?
So, Stuart, right now our strategy is we think the government's going to do everything they can to keep things up with their excessive spending and borrowing until we get to the election. So our strategy of buying the dip in the first quarter, we have been executing on that. Again, in the concentrated areas we want to be in. We plan to be nearly fully invested if things stay on trend by the time we get to March. But look, as we go through the spring and summer, we think things will continue to be good. But there are many outliers that post-election all bets are off. And I can assure you, when we decide to de-risk again, we'll be saying it loud and clear.
Okay, Eddie Ghabour back in full scale by March. Thanks very much, Eddie. I know we'll see you soon. Thank you.